Risk assets are down, and that's really the starting point of today's trade setup. Thanks so much for tuning in. I'm Neeraj Shah, and you're watching BQ Prime. The okay. So first, the U.S. markets actually did okay. Europe and U.S. didn't have that bad a day. Europe actually had a much stronger day. U.S. maybe not as much, but still in the green. The other cues should come up on your screen next. The CBOE VIX. Which is at about 24, 25 levels, dollar index between 106, 107, US 10-year yield 3.79. So roughly around that. But the SGX Nifty belies the true nature of the market. And frankly, the SGX is a lot more well behaved than what the rest of the Asian pack is doing. SGX is down about 0.5%. Rest of Asia, except for ASX, down even more. Now, including crude, by the way, is down as well, and therefore maybe that's a net positive for India. But like I said, most risk assets are actually trading largely soft. It's an interesting week, and maybe because from an Indian perspective, because of what Asia is doing, because of the fact that the FOMC minutes come out on Wednesday, or the fact that it's expiry, we may have a quiet mood as well. In fact, yep, the trade setup kind of says that the minutes of the latest FOMC on Wednesday, as well as the F1 expiring on Thursday, may play on investors' minds. Indices are likely to remain range bound, but metals may shine today. Now, even on that, by the way, and I'll talk about that a little bit, but just keep that in mind that metals will likely have a reaction on open today. Auto stocks have continued to grind lower for 2 consecutive weeks and may see pressure continue as per technical charts. So do watch out for autos. They haven't had a great run, to be honest. I mean, you've seen a bunch of these stocks come off. Be it Escorts, I think Eicher Motors hasn't had the best of runs since the time it came out with its results. A couple of two-wheeler stocks not quite doing well. So autos have had a very bad last couple of weeks, but unlikely to come out of the woods just as yet, at least at the start of the week. And chemical stocks continue to fall, by the way, but remain a sector that is ripe for selective stock picking. We speak to Sridhar Sivaram about that today as well on Talking Point. But that notwithstanding, I'm just saying, if you just look at the last few days from a Navi, except for UPL, which you will classify not necessarily as a pure play chemical company, but a Navin Fluorine has been weak. The Tata Chemicals has looked slightly wobbly. A clutch of other chemical names have just been rather lackluster, and that space is very widely owned, and which is why it's important to bring out when there is some pricing pressure out there on the stocks, that is. And speaking of chemicals, there's a listing today, RKN Chemical Industries. The IPO came in at about 407 rupees a piece. Got subscribed about 32 times, with QIB at about 49 times, retail about 10 times, and HNI about 15 times. So could be an interesting one on open. And then, of course, the comparatives about how expensive it is vis-a-vis the rest of the world will start as well. But watch out for RKN Chemical Industries. Could be an interesting listing today. A long list, a very long list of stocks to watch. And in fact, I may not have included some of those as well because it's a really large one. But these are the ones that are top of mind for me. And I'm jumping straight in the first 3.5 minutes to the stocks to watch just because it's a large laundry list. So first, and a lot of spaces deserve to be at the top of the pile. I've chosen metals for obvious reasons. The 15% export duty on steel and steel products has been rolled back to nil, and that is positive for a Tata Steel, JSW Steel, JSPL, what have you. So positive for all of those. Export duty on iron ore and fines of grade below 58% rolled back to nil, positive for an MDC. Duty on iron ore pellets has been rolled back to nil from 45%, which is positive for Sarda Energy and GPIL, Godari Power. And 15% export duty on pig iron rolled back to nil, which is positive for Kirloskar Ferrous as well as Tata Metallics. So net across the board in the metal space, these are the reason why I highlighted each of these individually, so that you know the kind of metal stocks that stay in focus today, right from all the steel companies to everything else that is mentioned out here. Now, the only viewers out here is that when I look at what all the brokerages have said, uh, the global demand is not the strongest. There is Russian steel out there in the market as well. There is Chinese steel out in the market as well. And therefore, the ability of Indian steel makers or some of the others to really export at a meaningful margin, really export in the first place, or export in a meaningful way to benefit from this, is not necessarily there. But remember, for the longest time, I mean, what people were waiting for was these duties getting reversed, or this export duties getting reversed, so that when an opportunity presents itself, steel companies can go out and export. Remember, this was the turning point in a manner of sorts for steel companies. From there, these are corrected quite significantly, and therefore, yes, people are not too positive on this development per se, aside of a trading pop, and the stocks may well come off after the trading pop as well. But somewhere, I think from a medium term perspective, unless the decision gets reversed, this is actually the big catalyst that people were watching out for. I would suspect, though, that after a pop, there might be, from a trading perspective, a bit of a cool off as well. You never know. Also keep in mind that some of these steel companies or some of the metal companies were very active in Friday's trade. NMDC, for example, was already up 4-5% in Friday's trade. So some bit of, not necessarily pre-positioning, but some bit of buying had already happened into some of those for various reasons, by the way. And therefore, it's very interesting to see if uh, the uptick that might come on open stays true or not. Watch out for steel. Jindal Poly, by the way, it's said to be mulling a sale of $1 billion European arm, and therefore that stock also remains in focus. Then the big one is Zomato. The co-founder Mohit Gupta has resigned from the company as well. Remember, Rahul Ganju, who was the head of new initiatives, had recently resigned from Zomato. Now, co-founder Mohit Gupta has resigned. There is one more resignation that I think happened in 2022, and another co-founder resigned in 2021. So there's a bunch of high-profile resignations that are happening out of Zomato. Does it stall the journey? No, the promise is strong, but yes, this should warrant a concern. Brokerage notes have been sanguine on Zomato. I think the one that I read, and let me just quickly pull it out for you. The one that I read was, excuse me for just give me a second. Yeah, the Jeffries note, for example, says that Zomato is, senior management departure, yes, but their checks initiate sluggish restaurant industry trends, which may push Zomato to focus on growth, and uh, Dipinder may head the food delivery business, which should alleviate leadership concerns. So uh, it'll be interesting to see how this one shapes up. Yep, as Virat tells me, earlier in the month, Zomato's vice president for global growth, Siddharth Jawar, had also announced his exit. So a bunch of high-profile exits from Zomato. Maybe the stock could be under pressure today. I would suspect it may be. Sensex changes as of December 19th. The inclusion is Tata Motors. As per Nuvama Wealth, the expected inflow is of $124 million, and the exclusion is Dr. Reddy's expected outflow about $90 million. Does that really alter the trajectories for either? I doubt, but you never know. Just keep this in mind. The other one very interesting is Deepak Fertilizers and Aarti Industries, of course. So the companies have signed a contract for a 20-year period supply of nitric acid. The contract is estimated to be more than 8,000 crores and over 20-year period. 8,000 crores over 20 years, by the way. And the supply arrangement comes into effect from the 1st of April 2023. Now, what does this do? I mean, to put the numbers into perspective, well, for Deepak Fertilizers, which is the seller, right? 8,000 crores over 20 years, which means arguably an average annual run rate of 400 crores, which is 1/5 or 1/6 of its quarterly turnover. So nothing dramatic, but it's a long gestation contract. Uh, and I would suspect in some fashion it adds stability of sorts. And it is great to see two Indian companies entering into contracts like these as well. From an RT Industries perspective, supply of nitric acid was a bit of a issue, and I think they have dealt with this issue. I would suspect that because they're the larger player, which is but the buyer, they might have done it at a good price as well, and therefore net positive for both. From today's perspective, maybe a slightly larger positive for Deepak Ferd because it is the seller and it stands to gain the revenue. But I would suspect both of them stand to benefit, and you may well see a small reaction into both, predominantly Deepak Ferd, but likely both. Also in focus today, viewers, are PVR and Inox. And this is my belief that these two remain in focus for this week because after a really long time, Bollywood has come out with content which might have brought viewers back into the theaters. We saw that with Unchai. We saw that with Drish. Now we've seen that with Drishyam too. I think I heard Kantara also had some decent numbers. So the crowds are coming back into the theaters, the Hindi watching crowds, and that might augur well for PVR and Inox. So you got to watch out for those. Those two are definitely stocks in focus. Some other stocks in news. So sugar stocks and Jet Airways. Sugar, because sugar has climbed for the third straight week with production woes in Asia. And Jet Airways, where the Jalan Kalrock Consortium has reiterated its commitment to restart the airline. Also, EIL, which has secured an order by Chennai Petroleum Corporation. I missed out on MIC Electronics. That also got an order, 87, 88 crores. So watch out for these. EIL, unfortunately, the release doesn't mention the size of the order. If some of you know the size, you might know whether this is a big thing for EIL or no. Excuse me, I don't quite know that. And IEX, wherein the board of the company will meet on November 25th to consider a proposal for buyback of shares. So therefore, that stock also could be in focus. There is some mention of telecom stocks because of price moves done by Airtel. So do watch out. It's a pilot of a significant increase in the minimum recharge in select circles, which shows clear intent to increase tariffs. Let's see if the competition follows suit. There's also a bevy of notes on HUL because it held its analyst meet. Nothing dramatic otherwise I would have brought to you, but yeah, I mean, it is guiding for impressive double-digit earnings growth over the next decade. You never know. It may not have the big bang start, but most actually, so people have come out mixed between being positive to being neutral. JP Morgan, his example, is overweight. They say it is cautious optimism. Jefferies is bullish, and they are saying that HUL is guiding for impressive double-digit earnings growth. Their target price, of course, is 3,000. Goldman Sachs is neutral. They are saying that, yeah, I mean, it's good. Companies building on its strength, etc., um, and all of that. But like I said, it's a bit of a mixed thing that people have come out with when it comes to HUL. So steel, Zomato, um, Deepak Fort and RT Industries, maybe sugar. These are all that are in focus for the day to day. You got to watch out for those. Lastly, what stood out for me is the optimism from uh, one one key industrial magnate, Gautam Adani, in a keynote address at an accountant summit, mentioned that India will become the world's third largest economy by the end of 2030 and the second largest by 2050. The stock market capitalization would possibly exceed $45 trillion in India, and there's potential for India to become a net exporter of clean energy. I mean, and 45 trillion sounds okay. If you remember the conversation that we had with Neelkant Mishra, he mentioned that India would need to grow, not ideal to grow, but need to grow northwards of 7% to the tune of 8-9% for not getting older before it gets richer. So if India indeed manages to do that, then 45 trillion by 2050 is a CAGR of 9.5% odd. Nothing too dramatic, but it's an eye-popping number. And for one of India's leading industrialists to come out and mention the kind of growth in the economy and the stock markets and the different nuts and bolts within is impressive. And therefore, I thought I should bring out those numbers to you before we wrap up Trade Setup today. Thanks so much for tuning in. Have a safe day ahead. Remember, FOMC minutes on Wednesday, FNO expiry on Thursday, and a bunch of global other cues coming out. Nothing too dramatic, but coming out. I mean, China CPI, etc., etc. So all of that will be in focus. Expect the week to be um, reasonably volatile in its own way, but crude coming off is a positive. So also a bunch of conversations lined up today. We'll be speaking to a conversation with Nitin Kamath by my colleague Muralidhar. So that is something to watch out for. Talking point today is at 11 a.m. and Sridhar Sibram, investment director of Enam Holdings, would be talking to us then. We talked to 5 defense companies through the course of this week, starting off with Mazagon Dock, the chairman and managing director, Vice Admiral Narayan Prasad Johnson, to talk about the growth trajectory. And through this week, we'll be talking to each of those to try and figure out whether the defense story in India is alive and kicking, and what about the future growth trajectory. And Metro Brands, the company's added a very interesting company acquisition in Fila and Proline. The CEO of Metro Brands joins in to talk about the growth that comes in from that acquisition. Thanks so much for tuning into the Trade Setup. Have a great day ahead.